Let's get real for a second. How many of you believe that you need to save 20% of a home's purchase price as a down payment before you can even think about buying? If your hand is metaphorically raised, don't worry. You're not alone. The myth has been around for decades, and it holds too many people back from their dreams of homeownership. Hi, I'm Kevin Martini, and I'm a certified mortgage advisor with the Martini Mortgage Group. And in this special episode of the Martini Mortgage Podcast, episode 199, called Mortgage Myth, you need to save up to 20% down payment. I'm here to bust that myth that's stopping so many first-time home buyers in their tracks. The truth is, you don't need to save 20% for a down payment to buy a home. And holding on to this outdated idea could actually cost you more than you think. By the end of this podcast, you'll know why waiting for that 20% might not be the best move, and how you could start your homeownership journey sooner than you ever imagined. Before I start digging in, I need to make those legal folks happy. So I'm Kevin Martini, a certified mortgage advisor and producing branch manager, NMLS 143962, with the Martini Mortgage Group at Gold Star Mortgage Financial Group Corporation, NMLS 3446, equal housing lender. This podcast is here to inform, educate, and entertain, not to provide legal or professional advice. Now, with that out of the way, why does this myth exist in the first place? The idea of putting 20% down comes from an old school financial philosophy. Sure, putting down 20% has its benefits. It lets you avoid private mortgage insurance. It reduces your monthly payment because you're putting more money down. But here's the kicker. This is not a requirement. The reality, most first-time home buyers do not put down anywhere near 20%. According to the National Association of Realtors, the average down payment for a first-time home buyer is closer to 6%. So where does this one-size-fits-all advice come from? It's rooted in a world where cookie-cutter financial plans ruled the day. But buying a home isn't a one-size-fits-all journey. Your financial plan should be as unique as your home buying goals. Here's something most people don't realize. Waiting to save that full 20% could cost you way more than just time. While you're busy saving, the housing market isn't waiting for you. Home prices are going up, mortgage rates could increase, and that dream home you've been eyeing, it may already be out of reach by the time you saved up. Let me give you an example. Say you're looking at a $300,000 home and you want to save 20%. That's $60,000. If you're saving $1,000 a month, it's going to take you 5 years to reach your goal. But here's the problem. In 5 years, that $300,000 home could be worth $350,000 or even more. And now you're starting from scratch with an even bigger savings target. Meanwhile, if you bought with a smaller down payment, you'd already be building equity in that home as values rise. This is why so many smart buyers decide to act sooner rather than later. Time in the market beats timing the market every time. The good news, you have options. Let's talk about the most common low down payment programs that are available to buyers today. Number one is the FHA home loan. With an FHA home loan, you can buy a home with as little as 3.5% down. An FHA home loan is not just available for first-time home buyers. Repeat home buyers are eligible for it even if they already have had an FHA loan in the past. The FHA home loan is designed to help home buyers become homeowners sooner rather than later. Oh, by the way, the Martini Mortgage Group offers a no down payment FHA home loan solution too. Yes, it's precisely how it sounds. For more information about our proprietary no down payment FHA home loan that is available for all home buyers, simply call the Martini Mortgage Group by dialing 919-238-4934. Number 2 is conventional loans, also known as conforming loans. Oh, by the way, they're called conforming loans because they conform to the guidelines set by Fannie Mae and Freddie Mac. Many conventional or conforming loans, if you prefer, allow down payments as low as 3%. These loans are often an amazing choice. Number 3 is the best home loan offering available in the marketplace. It's the VA home loan, and it is a game changer. If you're a veteran or active duty service member, you may qualify for a VA home loan, which requires 0 down payment. That's right, no down payment at all. This is one of the most generous benefits available for those who served our country. Number 4 is the USDA loan. Technically, it's called the Rural Development Home Loan, but it's commonly referred to as the USDA home loan. This unique program is for those looking to buy in an eligible rural or suburban area. USDA home loans also offer a 0 down payment option. These loans are perfect if you're open to living a little bit farther from the city centers. Now, let me be 100% transparent. Each of these options comes with their unique advantages. And that's why working with a mortgage strategist at the Martini Mortgage Group is so very important. We help you navigate these programs and find the one that fits your situation best. Now, let me address the elephant in the podcast, PMI or private mortgage insurance. Some people think, I'll just wait until I save 20% so I don't have to pay PMI. But here's what you don't realize. PMI is not the villain it's made out to be. In fact, it's a tool that allows you to buy a home with a smaller down payment. PMI costs are often much lower than the financial hit you take by waiting. And here's the best part. Once you reach 20% equity in a home, you can typically remove PMI altogether. So instead of seeing it as a burden, think of it as a stepping stone, a small price to pay to get in your home now and start building wealth. Here's the Kevin Martini bottom line. The sooner you buy a home, the sooner you start building equity and locking in today's prices. The longer you wait, the more likely it is that rising home prices and interest rates will make buying even harder. When you work with me or fellow mortgage strategist Logan Martini, we will create a personalized plan to fit your unique goals and finances. It's not about rushing. It's about understanding that you don't need to wait for that mystical 20% down payment to achieve your dream of homeownership. Let me share a quick real-world story. One of my clients, Sarah, she was convinced she needed 20% down before buying her first home. After we talked, she realized she could buy with just 5% down. Fast forward a year. Sarah's home has already appreciated in value. Her monthly mortgage payment is lower than what she was paying in rent, and she's building equity every month. Stories like Sarah are not rare. They're what happens when you get out of the way of outdated advice and explore the options that are available to you. So here's my challenge to you. Stop letting that 20% myth hold you back. If you're dreaming of owning a home but feel stuck, let's talk. I'm here to help you explore your options, answer your questions, and create a customized plan that works for you. Let's connect for a complimentary, no judgment consultation. Together, we'll craft a plan and a timeline that fits your goals and situation. Now, here's the best case scenario. You'll take the first step towards creating generational wealth. And the worst case, you'll walk away with a clear strategy for the future. Thank you for tuning in to episode 199 of the Martini Mortgage Podcast. Myth: you need to save for a 20% down payment. If today's episode sparked questions, don't hesitate to reach out. You can call me directly by dialing 919-238-4934. And here's a small ask. Share this episode with someone who needs to hear it. A little nudge from you could change their life. Together, we can help more people say goodbye to renting and hello to homeownership. Again, thank you for tuning in. And until next time, I'm Kevin Martini, wishing you peace and blessings. Remember, the dream of homeownership is closer than you think. Let's make it happen. You can do this.